Aloha everyone, this is Jurek and welcome back to my real estate adventures. Today I'm in beautiful Waikiki Beach. As you see Diamond Head behind me. It might be a little dark, but I hope you enjoy the view. Just with the sun, it's really coming down today. Today I want to talk about values on properties. People sometimes get a little confused with terminology or confused on value. When you look at a property in its current nasty, crusty, stinky type of condition, it could be a fair market value that we talk about. In its current shape or condition, what's the fair market value? What is somebody willing to pay for that? FMV, fair market value. Now, does that change after you do repairs? Of course it does. The value we're looking at after we would do the repairs is the after repaired value, ARV. So ARV and FMV are two different things. Fair market value is what is it worth now in its current shape. ARV is what is it worth fixed up after it's repaired. Often when you're looking at a deal, you're always interested in the after repaired value, but you have to know how much repairs are going to cost to be able to determine that. The other thing that comes up sometimes, people look at a tax assessed value, meaning how are they assessing the value of the property based on, say, the taxes. Now, in a lot of areas, this can fluctuate because the market can go up, the market can go down. Traditionally, a lot of assessed values are usually lower than the actual, say, appraised value, because when people are paying taxes, often you don't want the value real high on the assessed because it means more taxes. But in a market that increases rapidly and then decreases rapidly, if the taxes increase, like say, when we were in our heyday, 2005, 6, 7, 8, whatever, in Florida, assessed values went up really high. Then when the bubble burst, 2009, 10, and 11, it took them a while to come back. So what do I mean by that? Looking at a house that maybe had a value of $125,000, the assessed value could have been $110,000. And I'm only making up the numbers, don't hold me to this. But as the market increased and the house became worth $250,000, the value then went up every time it was sold. The assessed value increased in that particular market. Now the other thing is, as the market then declined, it took a lot longer for the assessed values to come down unless people appealed that, okay? So as you're looking at properties, yes, you can look at assessed value, you can look at history, but is assessed value true after repaired or fair market value? In most cases, no. So don't get confused by that. Where can we determine, true value of a property? It's what the public's willing to pay, what the open market's willing to pay. So that's why we use comparable sales of like type of properties that have sold. Where can we get that information or data from? From a realtor. A realtor has access to the big MLS database. They can tell you what properties have sold for in a given area. You can also go on a site like Zillow or Trulia, that sort of thing. It's going to have, and realtor.com, they're going to have values out there as well too. So I hope this helps you better understand values on properties. Until next time, this is Joe Jurek saying, Shaka, believe and achieve, take care, bye-bye.